Hey guys, hope you're having a great Saturday. I thought I'd just jump on. It's a pretty average day here watching footy finals, and I just thought I'd jump on and share with you a little bit about what happened during the US trading session on Friday, because the market had a major turnaround after it was actually up in the morning trading session after the US jobs report. So we got the what's called the non-farm payrolls report released, and that showed that the US unemployment rate had gone from 3.5 to 3.7%. There was 315,000 jobs created in the month of August, and the June and July figures for the jobs numbers were revised higher. So, there was a lot of people talking about it was a Goldilocks number, et cetera, but the market was high. The market liked the number. And it seemed like on Friday that we were likely going to get a reasonably positive day. I think when I went to bed about 11 o'clock Friday evening, Australian Eastern Standard Time, I think the Dow was up about 0.5%, NASDAQ and S&P up something similar. So the afternoon trading session rolled around, and then we had some news out of Europe. And that news was that the Russians have decided to shut off the Nord Stream gas pipeline. The company that runs that is essentially a Russian-run organization called Gazprom, and they've decided to shut off. They'd scale back supply to 20%, but they're making the excuse that because of an oil leak and maintenance that they're having to shut it down, which everybody knows is just complete nonsense. The Russians are shutting this off for political reasons because of what's happening with Ukraine and the sanctions against Russia and what have you. So the minute that news hit the Bloomberg screens on Wall Street, what you have is a situation where on a day-to-day basis, there's a lot of volume being created by hedge funds with algorithm systems. And once some news comes out, some pretty heavy news like that, and prices start to move, these algorithms, these what we call algos in the industry, they will just sell stocks very quickly. So you got this major turnaround. I think the Dow Jones actually, from top to bottom, the turnaround was about 700 points. So that wasn't good, and that's the reason why the market closed down. There was nothing with respect to US economic data that showed that the market should be down. I mean, the jobs number was pretty positive. A couple of things that I've took out of some of the data was that the unemployment rate went up, and there was 800,000 Americans returning to the workforce. Now, there was 315,000 jobs created, but in the past month, 800,000 Americans stuck their hand up that did not have their hand up the previous month and said, I want a job again. Why are they coming back to the workforce? One, wages are higher, but also their savings have started to be depleted from the pandemic period of 2020, 2021, where everyone got handouts. People were moving around the country, changing locations, their savings rates went up, they couldn't move around, everyone had plenty of cash. 800,000 Americans saying, I want a job again, tells me in the next few months, I suspect the unemployment rate in the US to continue to move higher. Now, that's a good thing, not a bad thing, because we want to see inflation come down and the demand destroyed. And not completely destroyed, because that would impact company earnings. We want to see demand a little bit lower. And what we're seeing in Europe right now is political. The Russians will continue to prod what's going on. Energy prices in Europe are up 16-fold. That's massive. And it could be a drag over the course of the next few months in Europe. However, I just want to make one point. I've said this a number of times, but I'll say it again. September is seasonally a weak period of the year. The next inflation report is out in the next 10 days. By the way, Monday is a holiday in the United States, so the market's not open on Monday. Inflation data is due out in about 10 days, and that's going to be the telling sign for the market. Inflation will be coming down. If it hasn't come down in August, it will in September and October and November. Prices are coming down. all the indicators are showing in all the sectors that prices are starting to retreat. Inflation will come down, and when it does, two things are going to happen. The US dollar is going to go down, and share prices are going to go back up. October has traditionally 65% of the time over the last 100 years been a positive month. And seasonally, everything that I'm looking at right now points towards the last 3 months of the year. The potential is being far more positive than the last 2 or 3 months. So I'm keen to get September out of the way, but I'm more keen to get to the inflation number in about 10 days from now, because the market doesn't care about anything else. Market only cares about one thing, inflation, because inflation is going to drive what the Fed does. And so long as you're continuing to invest in great quality businesses and you're a long-term value investor, you're going to do just fine. If you're speculating and jumping in and out, the sorts of things that happen on Friday, jumping in and getting positive on a jobs number, and then having to get out and getting your backside kicked because of what the Russians did with gas. That's the reason why people don't make money in derivative markets. If you want to make money, become a value investor, own great quality businesses, but learn how to understand why prices are moving, learn the seasonalities, learn the historical valuations of what tends to happen through periods of time. I got some really interesting stuff to show clients in Monday's report, which I'll get out to you first up on Monday. But I hope you have a great weekend. I hope your footy team wins, but that's essentially what's been going on. Have a good one.